So as of May 1st, 2025, the current spot price of gold is $3,240.66 per ounce. Gold is, currently experiencing a slight retreat in prices, mainly influenced by a stronger US dollar, easing trade tensions, and expectations for upcoming economic data, especially the US non-farm payrolls report. While these factors have put some downward pressure on the price of gold, market sentiment still remains pretty cautious, since global economic uncertainty is definitely still lingering. The U.S. economic outlook will, for sure, continue to play a significant role in shaping the gold price over the next 3 months. The release of the U.S. non-farm payrolls and inflation data will likely influence the Federal Reserve's decisions on interest rates. Strong economic reports could lead to a stronger dollar, which traditionally weighs on gold prices, while weaker reports may encourage further interest rate cuts or monetary easing, which could actually support gold. Despite the easing of trade tensions, global geopolitical risks, including developments in the Middle East, U.S.-China relations, and any disruptions in global supply chains, will continue to affect gold as a safe haven asset. Any sudden escalation in geopolitical conflicts could, honestly, trigger renewed demand for gold, pushing its price higher. Inflation concerns are likely to persist globally, with many countries facing price pressures. The expectation of more inflation-driven central bank policies could, support gold as an inflation hedge. On the other hand, if central banks hike interest rates aggressively to combat inflation, gold may come under pressure as higher yields make non-yielding assets less attractive. The strength or weakness of the US dollar will continue to have an inverse relationship with gold prices. If the US dollar remains strong due to favorable economic data or, say, aggressive interest rate hikes by the Federal Reserve, gold may struggle to gain momentum. However, if the dollar weakens due to concerns over inflation or recession risks, gold could see significant upside. Concerns about a potential global economic slowdown or recession could also drive demand for gold as a safe haven asset. While the U.S. economy showed signs of slowing in the first quarter of 2025, other global economies may experience similar downturns, prompting investors to turn to gold. The Relative Strength Index, or RSI, is currently hovering at 60, which suggests that gold is neither overbought nor oversold right now. This basically means there may be room for both upward and downward movements in the short term, depending on incoming economic data. Looking at the moving averages, the 50-day moving average is just slightly above the 200-day moving average, suggesting a short-term bullish trend. However, the gap between these two moving averages is narrowing, which could indicate potential consolidation or even a possible shift in momentum. For short-term resistance, we're looking at the $3,300 to $3,400 per ounce range, while short-term support is between $3,200 and $3,150 per ounce. The MACD, or Moving Average Convergence Divergence, is showing a mild bullish crossover, hinting that gold might see a bit more short-term upside. So, from May through June 2025, gold is likely to face moderate volatility. The price range could be between $3,150 and $3,400 per ounce, depending on economic data, the US dollar's performance, and any geopolitical events that might come up. If the US economic data surprises to the upside, gold may retreat toward the lower end of this range. But, on the other hand, any negative shocks, like weak data or geopolitical tension, could push gold towards $3,400 or even higher. As we move into the summer months, from June to July 2025, gold could continue to benefit from safe haven demand. If global risks, such as trade disruptions or inflationary pressures, continue to rise, we may see gold testing the $3,400 to $3,500 level. However, If the US dollar strengthens significantly, those upper levels of the forecast could remain out of reach. In a worst-case scenario, where tariffs on Chinese goods or other key import restrictions are reintroduced and escalate tensions significantly, gold could see a major price spike. In such an environment, we could expect the gold price to reach $3,700 to $3,800 per ounce, as investors flock to the safe haven asset amid global trade disruptions, geopolitical tensions, and fears of inflationary pressures. The reintroduction of tariffs would likely put significant pressure on global supply chains, further inflating production costs and exacerbating inflation concerns. This scenario would also lead to stronger demand for gold as an inflation hedge, potentially pushing prices to new highs. Key risks include U.S. Federal Reserve policy, where any unexpected changes in interest rate policies could lead to sharp moves in gold prices. Geopolitical events, especially a resurgence in tension in oil-producing regions, could push gold prices higher. And, of course, an economic slowdown, a deeper-than-expected global recession, could see an influx of safe haven demand, which would be bullish for gold. Gold is currently trading in a range-bound market, but with several key factors influencing its price in the coming months. The U.S. dollar, global economic data, and inflation trends will be the primary drivers for gold prices over the next 3 months. With a mix of bullish and bearish factors at play, the price of gold is expected to hover between $3,150 and $3,500 per ounce in the next quarter. Investors should keep a close eye on you. Disclaimer: this analysis is for informational purposes only. Gold prices are subject to market fluctuations and may change rapidly. It's advisable to consult with a financial advisor before making any investment decisions. It's for my YouTube channel Global in Target, so like and subscribe.